Have you ever wondered what happens if you invest $1,000 every year consistently? Many people think small investments cannot create large wealth over time. Today you will discover how simple yearly investing can grow into something powerful. This video will show how consistency and patience can transform your financial future. Like, share, and subscribe so you never miss powerful investing and wealth strategies. 10. Consistency beats timing. Investing $1,000 every year removes the stress of market timing completely. You do not need to predict highs or lows to build wealth steadily over time. Consistent investing allows you to participate in market growth across different cycles. Some years you buy high, but other years you buy at lower prices naturally. This balances your average cost and reduces the impact of market volatility significantly. Many investors fail because they wait for perfect timing that never comes consistently. Automatic yearly investing builds discipline and removes emotional decision-making completely. It creates a habit that leads to long-term financial growth and stability. Consistency ensures you never miss opportunities when markets recover and grow again. This is why regular investing often outperforms irregular or emotional strategies fully. 9. Compounding creates growth. Compounding means your returns generate additional returns over many years consistently. Each year your investment grows not only from new money but past gains. This creates an exponential effect that becomes powerful over long periods fully. Early investments have more time to grow and contribute to total wealth significantly. Even small yearly contributions can turn into large sums through compounding effects. Many people underestimate how powerful compounding becomes after 10 or 20 years. Returns build on top of returns, creating momentum in your financial journey fully. This process rewards patience and consistency more than large one-time investments. The longer you stay invested, the stronger the compounding effect becomes. This is one of the main reasons consistent investing creates significant wealth. 8. Market growth over time. The stock market has historically grown over long periods despite short-term volatility. Investing regularly allows you to benefit from this overall upward trend fully. Temporary crashes or downturns are normal but usually followed by recovery and growth. Yearly investments capture different market conditions and reduce overall risk exposure. This approach ensures you participate in both recoveries and long-term expansion consistently. Missing just a few strong years can reduce overall returns significantly. Consistent investors stay in the market and benefit from long-term growth patterns. This reduces the need to react emotionally to short-term price movements constantly. Trusting long-term growth is essential for building wealth through investing fully. This is why patient investors often outperform those who try to predict markets. 7. Dollar cost averaging effect. Investing a fixed amount every year creates a natural dollar cost averaging strategy. You buy more shares when prices are low and fewer when prices are high. This reduces the average cost of your investments over time consistently. It protects you from investing all your money at market peaks fully. This method reduces risk and smooths out the effects of volatility significantly. Dollar cost averaging works best when applied consistently over many years. It removes guesswork and simplifies investing for beginners and experienced investors fully. This strategy builds confidence and reduces stress during market fluctuations constantly. It is one of the simplest yet most effective investing approaches available today. This is why many long-term investors rely on this method for steady growth. 6. Discipline builds wealth. Investing yearly requires discipline and commitment to long-term financial goals consistently. Many people stop investing during downturns and miss future growth opportunities completely. Discipline ensures you continue investing regardless of market conditions every single year. This habit builds resilience and strengthens your financial mindset over time fully. Staying consistent during difficult periods often leads to the highest long-term returns. Discipline prevents emotional decisions that can harm your investment strategy significantly. It also helps maintain focus on goals instead of short-term market noise constantly. This behavior creates a strong foundation for building lasting wealth effectively. Wealth is often built by habits, not by luck or timing alone fully. This is why disciplined investors achieve better results over the long term. 5. Long-term horizon matters. The longer you invest, the more powerful your results become through compounding. Short-term investing rarely produces the same level of growth or stability fully. A long horizon allows your investments to recover from downturns and continue growing. Time reduces risk because markets tend to grow over extended periods consistently. Investors who stay invested for decades often achieve the best results overall. Long-term thinking prevents panic selling during temporary market declines completely. It also allows you to benefit from reinvested returns and dividends fully. Wealth grows gradually and then accelerates as time passes consistently. This effect becomes more visible after many years of consistent investing behavior. This is why patience is essential for successful long-term investing strategies. 4. Small amounts become large. $1,000 may seem small, but it grows significantly over time. Regular contributions add up and create a large total investment base gradually. Combined with growth, this base turns into a powerful wealth-building engine fully. Many investors underestimate the impact of consistent small contributions every year. Starting early gives your money more time to grow and compound fully. Even starting later can produce meaningful results with consistent contributions regularly. Small actions repeated over time create large outcomes in investing consistently. This principle applies to both savings and investment growth strategies fully. The key is to stay consistent and allow time to work for you. This is how small yearly investments turn into significant financial results. 3. Reinvesting returns. Reinvesting your returns increases the power of compounding significantly over time. Dividends and gains are used to buy more shares instead of being withdrawn. This increases your total investment and accelerates future growth fully. Many successful investors focus on reinvesting to maximize long-term wealth creation. This strategy creates a cycle where growth feeds more growth continuously. It also increases your exposure to the market without adding new capital constantly. Reinvesting is essential for achieving exponential results in investing fully. It transforms simple investments into powerful compounding machines over decades. This habit separates long-term investors from short-term traders completely. This is why reinvesting returns is critical for maximizing investment outcomes fully. 2. Inflation protection. Investing helps protect your money from losing value due to inflation over time. Cash loses purchasing power, but investments can grow and maintain value effectively. Yearly investing ensures your money keeps working instead of losing strength gradually. This protects your future lifestyle and financial security consistently over many years. Inflation affects savings more than investments that generate returns regularly. Investing in growth assets helps preserve and increase real wealth fully. This is especially important for long-term financial planning and retirement goals consistently. Protecting purchasing power is a key benefit of consistent investing behavior fully. Without investing, your money may not keep up with rising costs over time. This is why investing is essential for maintaining financial stability and growth. 1. Real results over time. If you invest $1,000 every year, results become powerful eventually. Over decades, your total contributions and returns can grow into significant wealth. This depends on consistency, patience, and staying invested through market cycles fully. Many people quit early and never see the full potential of their investments. Those who stay committed often achieve financial independence and long-term security. Your results improve as time passes and compounding continues to build momentum. This simple strategy can outperform complex approaches that lack consistency fully. Real wealth is built slowly and steadily through disciplined investing behavior. This approach works for beginners and experienced investors alike consistently. This proves that simple habits can create extraordinary financial outcomes over time. Now you understand what happens when you invest $1,000 every year. Consistency, compounding, and patience turn small investments into powerful financial growth. This strategy is simple but extremely effective for building long-term wealth. Share this video with friends who want to start investing and growing money. Subscribe and comment how many years you plan to invest starting today.